Imagine waking up tomorrow and discovering that your money, every bill, every coin, every digital balance has lost its value overnight. Not because of a bank glitch, not because someone hacked your account, but because the system that gave your money meaning simply stopped working. Your savings would buy almost nothing. Prices would spiral upward by the hour. And in that moment, one question becomes terrifyingly real. If money fails, what actually survives? This isn't a hypothetical mystery. Every empire, every financial system, every currency in history has faced this moment, and most did not survive. But something else always did. That's the hidden pattern we're about to unravel. To understand what really outlives a currency collapse, we first need to rethink what money actually is. We tend to treat it like an object, something with inherent value. But money is not value, it's not wealth, it's not security, it's a story. A story that works only if everyone agrees to believe it. A government stamp, a bank promise, a digital entry, these are just symbols of a bigger idea. Trust. But throughout history, that trust has broken again and again. And every time it breaks, an entirely different kind of economy quietly surfaces beneath the ruins. This is the part of financial history that almost no one talks about. Our story begins in the ancient world where the first currencies emerged as a way to standardize trade. Kings minted coins with their faces engraved, promising consistent value. But the moment rulers tried to stretch their power by diluting metals or overissuing coins, people noticed. In the Roman Empire, coins were repeatedly mixed with cheaper metals. Citizens still used them, but confidence slowly eroded. Markets shifted to alternatives: gold, grain, livestock. It's a quiet truth buried in history. Money collapses long before the public admits it. By the time Rome fell, the official currency had become meaningless, and the real economy had already migrated into barter and precious metals. Centuries later, the same story resurfaced in a far more dramatic way. After World War I, Germany found itself drowning in debt. The government began printing money to pay what it owed. First cautiously, then desperately, until the printing presses never stopped. Prices doubled by the week, then by the day. People carried paychecks home in baskets because their money lost value between work and home. But the collapse wasn't truly caused by the printing itself. It was triggered by something deeper, the loss of faith that tomorrow's currency would be worth anything at all. And once that belief vanished, the currency died, not slowly, instantly. What happens at that breaking point is the most revealing part of this entire story. When a currency loses its meaning, people instinctively search for something else, anything else that can carry value. During Yugoslavia's collapse in the 1990s, cigarettes became currency. In Zimbabwe, gasoline and food replaced banknotes. In Argentina, when banks froze accounts, the peso still technically existed, but nobody trusted it. So the real economy shifted: underground barter networks, dollar markets, black market exchanges. And here's the surprising truth. While currencies collapsed, societies didn't disappear. They reorganized themselves around what people actually needed and trusted. So what really survives when money fails? Not the paper or the digital numbers. What survives are essential goods: food, water, medicine, fuel. What survives are productive skills, the ability to fix, build, grow, transport, heal. And what survives, more than anything else, are networks of trust: families, communities, local traders, underground markets, and alternative systems that emerge when the official one breaks down. These are the real currencies of collapse, the ones that have outlasted every financial disaster in history. Governments always try the same rescue strategies when their money begins to fail. They print more. They freeze accounts. They reissue new banknotes. They blame speculators or foreign forces. They promise stability while quietly preparing for resets. But none of these fixes address the root of the problem, because the crisis is never simply about money. It's about credibility. Once people stop believing that their currency will hold its value tomorrow, no reform, no new bill, no new policy can restore that belief. History shows that when trust dies, the currency follows soon after. Now comes the uncomfortable part, where past patterns collide with modern reality. Around the world today, we see the earliest signs of the same shift: nations carrying record levels of debt, prices rising faster than wages, savings losing purchasing power each year, underground and informal economies expanding quietly. Over 2 billion people globally now rely on some form of alternative economic system, whether digital, barter-based, or unregulated. This doesn't mean a collapse is happening tomorrow, but it means the pattern is repeating. Trust is migrating. And once that migration begins, it rarely reverses. So what should we take from this story? First, money is only as strong as the trust behind it. No matter how powerful a nation or how sophisticated a banking system, a currency lasts only as long as people believe its story. Second, value never disappears, it simply moves. When money collapses, people shift to goods, skills, and relationships because those are the real engines of survival. And third, parallel economies, digital, underground, or community-based, are not anomalies. They are warning signs. They are the early indicators that trust is leaking out of the official system. As we move further into a world of digital currencies, debt crises, and shifting power structures, we have to ask ourselves a difficult question. If every major currency in history has eventually fallen, which parts of our financial system are truly built to last? And more importantly, when the next shift comes, will we recognize it before it happens? If you want to understand these hidden patterns, the warning signs, and the systems that rise when old ones fall, make sure you subscribe, stay informed, and stay curious. Because when money fails, the people who understand value, not currency, are the ones who survive.